Hi, and welcome to the Stockscores Market Minutes for August 8th, 2014. You know, the market cycles between periods that are easy to trade and others that are difficult. Looking back this year, I recall in January and February that the market was very easy to trade because there was volume, there was volatility, and investors were eager to own stocks. On the other hand, in July, it was a real grinder's market where you had to be patient, be very selective, and when you found stocks that were worth trading, they didn't have the sort of follow-through that we would like. And this is really the way the market has always been. The market cycles from periods when it is hot and periods when it is not. And you can't control the cycle, you can only react. It's important, therefore, to be flexible and to go where the action is. You know, in the last week, I haven't really focused on individual stocks because that's not been where the action is. Instead, the action has been in volatility in the fear index, or the VIX, and so trading the VXX has been relatively successful. If there is no action, working harder won't make you uncover something that really isn't there. In fact, working harder will hurt you more than it will help you, because it means that you end up lowering your standards and taking marginal trades. When the market is quiet, you have to be patient for conditions to change or go looking for areas where there is action. All right, let's get into this week's analysis. The S&P 500 has pulled back to its upward trend line and is holding on Friday, indicating that we may hold that upward trend line. Now, we would always expect the market to bounce off of the trend line, and it could simply have 1 or 2 weeks of up action but fail to make a new high and then roll over and break that upward trend line. Given seasonality, that's certainly something that could happen. We tend to see weakness in August and September. However, until that upward trend line is broken, I think we must remain bullish, and although we might want to be cautious with individual stocks, if good trades come along, as long as that upward trend line is intact, then I think we take those. So a decent performance to close out this week, and indicating that we may see that upward trend line hold and the long-term bull market remain. The TSX has been moving lower, largely on weakness in the energy sector, which went up very quickly and needed to see some profits. We've seen pullbacks in the price of oil and natural gas, and so it's only reasonable to see pullbacks in those stocks which have done very well this year. The upward trend line on the TSX is still intact, although here we're seeing that we've got a little bit more distance to fall until it gets down to that upward trend line where it will find support. So I do think we could see a little bit more weakness in the TSX than we have seen, or that we will see in the US markets. TSX Venture, really a dead market, has been that way for some time, stuck in this sideways trading range. The good news is it's stable. The sellers seem to have lost their motivation. Now we just simply need a reason for the buyers to act. And we are starting to see a small pickup in the mining sector, and that may carry over into the fall. So there is hope for this sector. And after a long period of sideways trading, certainly it has built a good base for a move upward. But until we see the TSX Venture move up through that red line of resistance, I want you to be real cautious with this group. Treasuries continue to grind their way higher, and some experts in the bond market are saying that we could see this trend continue even further, with an expectation that the 10-year bond yield could dip down even below 2%. I heard big bond manager yesterday say that. So certainly the chart right now is in an upward trend from left to right. That means interest rates are going down. That's good for the consumer. It's good for the housing market, and really good for the stock market. So this is not a bad thing, but we'll have to watch and see if that trend continues. US dollar has been doing well for the last month. It's coming into resistance now, so I expect that that strength that we've seen in the US dollar may start to dissipate, and we'll see it, if nothing else, go sideways, although it could perhaps move backwards as well. Gold broke a little downward trend line this week, but it is still in that pennant pattern that's been building for a long time. And so we shouldn't get too excited about the price action in gold. It is a positive step, certainly, but being in a pennant pattern until that longer red line that I have on chart is broken, you don't want to get too optimistic about gold. Now, what I am seeing is there are a few gold names that are doing well. Samafo, Lakeshore Gold come to mind. These stocks probably are doing a great job of executing within their business, and with stability in gold prices, they are able to do well. So you can find pockets of strength in the gold mining sector. Oil market, as I said, pulling back, and it still has some distance to fall before it gets to support at the upward trend line. So I think we could see oil come down even farther yet, and that would probably contribute to the TSX performing a little poorer than the S&P 500, for example. But there's not a ton of downside yet, so I think oil should find support on the ETF OIL at around 2250. And finally, the fear index. This is where I have seen the action in the last week or so. You can see it on the chart. The volume increased. The price action has been to the upside. And that's been really in a dead summer market. That's been the place to trade. If this market holds that upward trend line, I think we're going to see this back up. So I've got a position in the VXX, and I'm going to wait to see how it opens on Monday, but I may take my profits on that one soon. All right, so bullish on U.S. stocks long term, neutral on short term. I mean, we have been moving down, but we are at support now and showing some signs, particularly here on Friday, that the market is bouncing. Similar on the Canadian market, although a little bit more downside in the short term potentially. Gold neutral, it's in that sideways price pattern, but showing some life, just needs to show a little more life to get it out of that pattern. Neutral long term on oil, it's in a long term sideways range, but bearish in the short term as there is some profit taking in the oil market. So we've continued to see some profit taking on light volume in equities this week, but as markets near trend line support, the sellers are going to get simply less motivated. A bounce in the near term is likely, but we should guard against a break of that upward trend line as we go into September and the seasonality that typically comes at this time of year toward weakness. Gold's life this week does not yet break the pessimism, but the chart is improving, and oil is approaching some short-term support, but it still has some risk in it. Well, that has been the Stockscores Market Minutes for August 8th, 2014. Have a great week in the market and trade well.